Hey traders, today is Thursday, February 12th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame look at gold. It's been an extremely volatile start of the year, and a lot of people are asking what's going on with gold at this point. Did a nice deep dive in this morning. Look, we topped out at a technical barrier that we had mapped out last year. 55.20 into 56.14. You're looking at the 2618 extension from the advance off of the December 2024 low, and then just the 1618 extension of the advance just off of the August lows. Both of those levels converged on the upper parallel of this embedded pitchfork last month. Now, this stretch into the record high was the largest single week range in the history of gold pricing. Okay. And that was preceded, or it was followed rather, by the largest single day loss. And I'll show you that in a daily chart in a moment. But the point being, we are in a potential time period of digestion that could last for some time. Momentum is still in overbought condition. That keeps the momentum in the favor of the bears. We've been in overbought condition since September of last year, but it's pulled back from overbought on the daily, on the 4-hour, and we could see some time here where we were just digesting this massive move. So just a quick note on that. Here's what the daily chart looks like. A look back of the last few decent corrective type of pullback moves in gold. Right now, we're 21% off of the highs, or at least that decline off that January highs was a 21% stretch. In the last 2-3 previous pullbacks in gold, back in October, we saw a decline of 11.2%. That took over 2 months, nearly 3 months before we finally cracked the range decline. Again, in April of last year, we saw a decline of 10.8%. That one took nearly 4 months before clearing the range decline. Previous to that was back in October of 2024. That one was a decline of 9.3%. Took nearly 3.5 months before we broke out of that range decline. So we are in a time period here where we could see some more consolidation, digestion in price action. If we go back to the last major considerable decline of 20% or more, you got to go all the way back to the 2022 decline. In that instance, where we saw a 22% drop, it took nearly a year and a half before that decline finally gave way. Previous to that, back in 2020, was also a 20% decline, roughly 19%. That range decline took years before we cleared out. Now, I don't think you get that kind of duration on this pullback. There's a lot of fundamental tailwinds for gold. Obviously, you have the inflationary concerns, geopolitical concerns, lower rates in the United States, large central bank buying. So I don't think we're going to get a year of consolidation, but we could be in for a couple of weeks, if not a couple of months before we break. Key levels to keep in mind. The low day close for February. So the low day close registered on the back of the record high is 46.60. That converges on the August trend line over the next few weeks. Major support on the daily chart. Ultimately, losses below 4,500. 45.33 is last year's high day close. That pivot zone, a break and a daily close below that would suggest we're in for potentially a much larger type of correctionary move. But those are the two levels of support on the downside we would need to hold. On the upside, just a simple 618 retracement of this most recent decline gives you 51.41. And then the high day close, the record high day close comes in at 53.78. We would need to clear this zone to mark the potential for a retest of the highs and a stretch towards 6,000 on the upside. So that's all from the daily chart. We can drill down even deeper. Here's the 4-hour chart. This is a pitchfork just extending off of the lows that you made back there in October of last year. You can see that the median line now further highlights 51.41, that 618 retracement. Monthly open support, just where we opened February, gives you 48.94. And then again, the February low day close at 46.16 would need to hold. So as long as we're in this formation, the trade does still remain constructive. Just a side note, 2 equal legs off the low. So if we just count 1, 2, 3, you got the 100% extension converging right on the high day close. And that gives you 53 at 43 into 53.78. That's again the level that we would really need to beat to surmount or threaten resumption of the uptrend. So we might be in for a long grind here. Patience pays. We do get some key inflation data tomorrow with those CPI figures. We are expecting CPI to ease a bit, headline to 2.5 and also core to 2.5 for that matter. So keep your eyes on those data prints. Be patient. We could see some sideways action here, but ultimately the broader uptrend does remain intact, and we would need to see that breach above 53.78 to mark the resumption or at least a retest of the record highs. Near-term support 46.60 and bullish invalidation right into 4,500. We'll try to keep you updated as always on X at MB4X. Till then, best of luck trading. We'll see you next week. Cheers.